Come on board Dr. Ashutosh Raghuvanshi, MD and CEO at Fortis Healthcare, and talk about how their business is shaping up. Mr. Raghuvanshi, PE investors of Agilus Diagnostics have now exercised their put options, and now Fortis will have to acquire that 31.5% stake from them. Why does Fortis think that letting the PE players exercise this option was a better, opportunity or available option rather than an IPO? Because your IPO plans were scrapped this year.
There was filing which we had done, but for commercial reasons at that point of time, we withdrew that. However, the PE partners had come in June of 2012, and they have been very good investor partners with the company. And since they had a right to put the put option in case they do not get an exit by a particular date. That's hence they have exercised their right. So for us, we believe that there is a lot of value in Agilus, and that's the reason why we have decided that we would acquire this 31.5% stake.
So how will you fund this acquisition? The fundraise you are doing for this, is this in connection for funding this entire buyout?
That's correct. Since we are a FOFC company, we have to do a FPI debt route. So the board has approved to go ahead with a listed secured non-convertible debenture for 1,550 crores. So we would be submitting for all the necessary approvals for this, including shareholders' approval and other statutory approvals. Following that, this fundraise would be done. As you are aware that, probably our balance sheet is very healthy. Our debt to EBITDA ratio is only 0.22x. So we have only about 308 crores of net debt on our balance sheet at the moment. So this is a very comfortable situation for us.
Right. So, Mr. Raghuvanshi, will the company then plan for an IPO after this stake purchase, or you think IPO is completely out of the question now?
See, the business had seen its ups and downs. It is a known fact that this business has underperformed compared to the industry peers, and we need to make a lot of effort to bring that value out of this business. We believe that there is a lot of inherent value sitting in this business by increasing our share of specialized testing, etc. We are going to improve the profitability and the performance of this business. There were a lot of headwinds in the past 2 years, especially the brand change was one thing which affected the business in a negative way. So as a result of that, the business suffered. So we believe that we still have to go for the right timing for seeing how to give the best value out of this to our shareholders. But at the moment, the focus would be on rebuilding the business and recalibrating it. As you know that the competitive intensity in the diagnostic market has also started sort of becoming a more realistic than what was happening earlier. And as a result of that, we believe that this business has a lot of value sitting in it, which we need to realize further.
You've said that the diagnostic business performance this quarter is lower than the corresponding previous quarter. Is this largely because of the impact of the brand change?
So we have seen some improvement happening in the first quarter as well in terms of the EBITDA. Though the revenue growth was not very significant, the like-to-like comparison, the revenue growth was only barely about 2%. But the EBITDA numbers had improved compared to the last year. We are expecting that this performance will keep on improving from here on. And we are seeing trends of increasing number of tests happening during the current quarter. So we certainly expect a better performance going forward.
Right. Could you tell us how the competition in diagnostic space has been? Because we've been hearing that the Indian diagnostics industry has been facing very high competitive intensity, especially from online players.
Yeah, so I think there was a lot of froth in the market earlier in terms of how these other new age players were pricing these tests. And they are, mind you, offering mainly the routine tests. Specialized tests are being offered only by the larger players such as us and the others. And we continue to focus on the specialized tests, which are more B2B kind of tests. So the pricing pressure which was there on the routine tests on the wellness side, etc., is coming down. As I said earlier as well, it is actually coming down because there has to be a realistic pricing, a kind of a discount which is very deep discount is not sustainable for either a new age player or an old player, because essentially what is the difference between a new age player and the incumbent players is that they are using digital first, but all the incumbent players have also upped their game in terms of digital presence, including us and all the other players as well. So because of that, I think the playing field is becoming level. And as we go further, I don't think the timing of those deep discounts will come back.
Right, Dr. Raghuvanshi, great to have you today on ET Now. Thank you so much for taking the time out.